Again, y'all be safe. Y'all be good. Again, as soon as we close this stream, should redirect you to this new stream. Again, here's the link. Check it out. There's the link for the Meta stream. If it doesn't redirect you, there's the link right there. Check it out. Good luck. I'll see you guys over there. All right, so there we go. We started this stream. We ended the other one. We should have done redirect. I'm pretty sure it worked. That was actually a pretty big FOMC stream, man. We got over 30,000 clicks on that one. So, hey, cheers to you guys. Thank you so much. We appreciate the love. We are back over at this stream today. All right, so BG, you said Huckleberry. So it's actually, if you've never seen the movie Tombstone, you got to see the movie Tombstone to understand that quote. You really do. You got to see the movie Tombstone. It's a cowboy movie, but like, you know, it's a cowboy movie. It's good though. Everybody knows it's good. All right, we're gonna get some music playing here. And look at my lines. I'm looking like John Madden over here on this chart. Okay, good. As long as redirect worked, we're over here, guys. We're over here. I'm your Huckleberry. Yeah, that's it. You got to go see the movie Tombstone. It's just a good movie. I don't know. Not according to the Fed, son. They said there's a path towards it's a stock trading platform that's located here in the U.S. It's a sponsor of mine. Really useful platform. Again, they gave me Tesla as one of my free stocks, and so I'm happy with them for sure. But they're also a sponsor of mine. But yeah. Hey, bro, I'm outside the U.S. and going to move to Cali. Maybe you have some advice to find a good, perfect house for me. Yeah, Tombstone is a love story. It is. You know, it's the greatest love story of our time, to be honest. Better than Titanic. But Tombstone, yeah. I don't know. I don't have any advice for you moving. I'm in Texas right now. And so the housing market is wildly different here than there. So I'm not sure, bro. All right, we got about 800 people here for our crypto stream. Again, Meta. Let's put the Meta chart up. We're going to get this way. Again, we did get funded on Top Step today, guys. We got funded on Top Step. I'm pretty freaking pumped about it, to be honest. And so let's talk about it. Speaking of Moomoo, let's put Moomoo up on the charts. Let's get Moomoo up here. It's Meta earnings day today. And so we're going to pull this thing up. Let me pull Meta up right now. All right, we're going to put Meta up on the chart. Meta has been on a wild run. Guys, what a crazy run for Meta. The last year or so. What a wild run. Here's Meta right here. You can also see Apple on the left, but Meta at 299 today. Dipped a little bit since the Fed meeting, but here's Meta right here. It's just still been a pretty good day. You know, here's Meta right here. Dipped all the way down to 290s and then all the way back up to almost 300. Again, if you want to check out Moomoo, I will put the link up. If you want to check it out. Yeah, they're a sponsor of mine. Very useful. Like, again, I only accept sponsors from places I actually use. You know what I mean? Or like places I actually think are good. You know, I should catch it back up on chat. Let me make sure I monetize this stream. I think I did. And then we're also going to, yeah, we're monetized. All right, let me get the music up here. Here, you should be able to do it. All right, we're going to pin this to the top of the chat. We're going to do a poll here as well. Be bullish or bearish on Meta's Q2 earnings. I called it Q1 in the title. Oh no, man, it's Q2. I'm dumb. There we go. Are you bullish or bearish on their earnings, guys? Let me know. We're doing a poll right now. Vote on the poll. There. We're also going to do a poll on Twitter. So did a witness testify in front of Congress that the U.S. government has recovered, quote, non-human pilots from UFOs? Anthony Pompliano just posted that. I don't know if it's true or not. Again, I'm just reading what he said, but all right, again, we're going to stream the full Meta earnings call. All right, beat or miss, guys. Beat or miss. So Meta is expecting, we're going to put this up on screen. So Meta is expecting currently 287 EPS on 31.06 billion in sales in revenue. All right, again, we'll see how many people truly support this channel here. Oh, wait, let's undo this. Hold on. Let's only make it 2 hours. All right. Again, here's the poll. Vote on the Twitter poll. We appreciate it. Show support for the channel here. Let me exit out of this. Here's the Twitter poll. Vote on that poll. Let us know how you feel about Meta here. Full report drop at 4 p.m. Eastern time, followed by 5 p.m. Eastern Standard Time. Oh, wait here. We get a ticker scrolling at the bottom of the screen. And Meta's starting to pop up a little bit. Beat, the stock will go down. I'm bearish if Zuckerberg goes heavy into the metaverse. Yeah, how much AI hype is Meta going to get, I guess, is the question. Yeah. Yeah, so again, here's Meta on the right side here. We got Apple on the left. Here's the SPY. So I don't think we have any big earnings tomorrow, do we? I'm pretty sure we don't. Not tomorrow evening at least, which is the one I'm talking about. So tomorrow morning we've got McDonald's, Southwest, MasterCard, Crocs, Valero, AbbVie, Bristol Myers, Honeywell, Overstock.com, Hertz, Tractor Supply, Keurig, Dr. Pepper. So we got some stuff dropping tomorrow morning. It's not like McDonald's is probably the biggest one. Southwest maybe. And then in the afternoon, we don't really have anything big. We got US Steel, Roku, First Solar, Intel. Intel might be interesting with the AI craziness that we've had. Honestly, guys, I bought Microsoft on the dip, and this turned out really nice. What the heck did I just click? ENPH. Yeah, Threads and AI are definitely going to be hyped up, but again, we'll put the expectations for Meta. Meta quarter two expectations are for, again, they are expecting 287 EPS on 31.06 in rev. Again, let me know if you guys think they're beat or miss. Look at our Twitter poll. Nice. We got a bunch of votes. All right, so far, 63% of people think on Twitter that we're going to beat. 37% think we're going to miss. What's the best way to copy trade? I mean, I don't know. I wouldn't recommend you copy trade too heavily anyway. You can use platforms like that give you certain signals and stuff, but I'm not sure what you should do, man. Everybody's different in terms of strategies. Y'all do me a favor, bump those like numbers up and vote on the poll, participate. We got 250 votes already. 58% are bullish, 42% are bearish. SPY starting to pop up a little bit along with Meta here. Here's Meta on the right. So for all my crypto bros, do people still use NBA Top Shot? I've got some cards from years ago, but like I haven't looked at them in a while, and in my opinion, they've just depreciated so much that like it's not worth it. What do you guys think? I'm still holding my Disney calls. What's Disney doing right now? I don't even know. Disney, I think, is green on the day. Yeah, Disney's green technically on the day. It's at 85. It's almost at 86. It's been basically flat all day, but it's still green technically. Previous closing price was 85.60s. It's at 85.90s now, so it's up about 30 cents a share. I have no idea about XRP, long or short, no idea. Hey, Carol. Let's see if you hear me. I mean, no, Mo, I'm not sure, man. You're asking me very subjective questions. Like, do you know somewhere you can invest and get good returns? No, do you mean like platform-wise, or do you mean like stock-wise? I mean, you can try out my sponsor at the description if you want to check them out. They're pinned to the top of the chat. They're regulated in the US, and they're nice. But again, it's subjective. People are going to like different things, but I like Moomoo, but I don't really like plug it at the beginning of streams. I try to balance it a little bit more. So if you want to check it out, you can, but I'm not going to do a plug or anything like that. You know, I'm not trying to hate on some of these crypto channels following me, but I saw one that was almost all bots, like it was all fake followers. What happened to this guy, man? I'm for an age limit in Congress, dude. There needs to be an age limit for Congress, man. Meta's still pumping up over 300s now. Over the last couple minutes, we've popped all the way up to $300.50 for Meta. Still moving up nicely. Check out the links in the description. There's a lot of good resources there. First channel. I'm not going to just plug anything right now, but if you want to check them out, links in the description. There's tons of good resources there if you want. But Disney's still pushing up. Yeah, Meta up to 300 point. Almost tapped 301 for a second. It might have hit 301. Yeah, so it looks like it got pretty close to hitting 301 up here. Didn't quite hit it, but Meta's getting pretty close to going to 301. It's still slightly red since market open, but not much, and it's still trying to make moves. So yeah, Mitch McConnell said it was a bout of dizziness. Yeah, eBay earnings today. Again, 15 minutes, all these drop. So in 15 minutes, there, all the big ones drop. We got Meta at 405, Chipotle at 410, ServiceNow at 410, Lamb Research at 405, Enovix at 4, QuantumScape, which is a pretty big company, at 415, eBay at 405, and Mattel at 405. And then you got like Wyndham, United Rentals, O'Reilly, and some other ones, but those are the big ones. Yeah, I think eBay's still around, but it's just much less big. It's just not as big as it used to be, of course. Such a big day, man. In terms of economic activity, this week is just freaking huge. What a day. Again, Disney push it up some. I gotta go to the bathroom, honestly. I got 13 minutes. I might go down. I'm gonna be right back. Bathroom break. Yeah, let me see. So I'm gonna check. All right, so again, Meta pulling back a little bit. The dollar index is at like almost 101, a little bit under 101. I'm gonna go to the restroom real quick, guys. I'll be right back. Not that I really use. Restroom break. I've been sitting here for a couple hours. I will be right. All right, we're back. Yeah, I mean, listen, somebody said I remember saying buy XRP when you started the channel. Listen, I'm not gonna follow any of you guys in any trades ever. Like, no offense. You know how many people I have that tell me to buy random securities in crypto? Like, no offense, but y'all are just a bunch of random dudes on the internet in the comment section to me mostly. I mean, I appreciate you guys, but like, I'm not gonna take your stock picks. I'm not gonna take your crypto choices either. You know, like the internet's funny. It's like the overwhelming probability of a 25 basis point rate hike is 99%, right? Yet we do 25 basis points, and then we get a bunch of people in the chat like, "See, I told you." And it's like, of course you did. At 99% of the rest of the world told you too. You know, like, y'all get out of here with that nonsense, man. Anyways. Yeah, I did see that, LB. Yeah, top 3 bladders in the world right now, bro. That's what I'll tell you guys. All right, hey, we got 9 minutes here. 9 minutes, team. 9 minutes, guys. What do you guys think? Beat or miss? How will this influence the rest of the market? Meta pulling back pretty big right now. They're dipping. Definitely a pretty dippy dip right now in Meta. One of the dippiest dips I've ever seen for sure. They're starting to dip. They're at 298.60s. Your opinion, Disney versus SoFi? Disney. How long do I have to hold? Yeah, buy Bitcoin. Yeah. If holding long term was an option, I'd buy Disney. If growth is the goal, I'd buy SoFi. You know. Yeah, definitely top 3 for sure, Tony. Definitely top 3. 5 years, Disney. Dude, I know about XRP, man. I promise. I run a crypto channel, man. Like, I know about XRP. You know? No, I see you, Joe. Hey, what's up, Tiny? Thank you so much, man. Thank you so much. I appreciate it. Hey, have a good day. Hope you're doing great. All right, Meta dip it down. Again, tomorrow the big thing. Yeah, what's up, Joe? No, I see you, man. Did you email me or Discord? I see it. I don't know if I'll create a top step section of our Discord. I don't know. I haven't been paying much attention to our Discord. I know you guys know this. So our Discord's been a little light and slow in movement. Honestly, there's just so many bots on Discord. It's hard to manage the community. I use mostly Discord to like communicate with contractors and mods and stuff. But anyways, Meta dip it down a little bit. Let's see if it holds down here. It's in 6 minutes, so Eastern Standard Time. Yeah, I'm not really advertising one, but if one pops up, sorry, it's an old link. I'll have to reset it. That's okay. The other problem with Discords is this, right? So the other main problem with Discords is this, right? Like I'll be honest. is that with trading, a lot of traders don't last very long in the market. So like they'll be all hyped up about day trading. You'll see all these new people. They'll be like, yeah, day trading, woohoo. You know, or it might be swing trading or investing, like, yeah, trading, woohoo. And then like 3 months later, they're gone. You never see them again, right? They lose so much money, they quit, they give up. Like, so, you know, unless I'm just constantly plugging the Discord, we're not going to have a ton of activity, and that's all right. You know, again, YouTube's kind of my main source here. We're also building our Twitter. If you guys want to follow me on Twitter, I appreciate it. Thank you so much. Again, our Twitter's been getting some growth lately, and so I appreciate it. We asked people on Twitter about Meta. 64% think they're going to beat. If you want to vote on that poll, also subscribe to my Twitter. Follow me on Twitter. Here's the link. There's the Meta expectations here, guys. We got over 800 people here. We got 4 minutes. 4 minutes. I don't know. What happened to the cage match between Mark and... yeah, it's not Twitter anymore. It's X. What happened to the cage match between Mark and Elon? What happened? Is that still going on? Is that still a thing? I don't know. I haven't been paying much attention to it, in all honesty. Man. Yeah, I think Mark would probably beat up Elon, realistically. Like, honestly, I think Mark would beat up Elon. Mark's been training Brazilian Jiu-Jitsu and Muay Thai for at least a year, I think. And so, despite the size differences, I think Mark would probably beat up Elon, realistically. Unity, I've watched Unity a bunch. But it's just not a company I know well enough to invest in for me. I think Palantir earnings will be good. What are Palantir earnings, Alex? Are they today? No, they're not today, are they? They might be. I don't freaking know, man. All right. Testing the 200 EMA now for Meta on the right side. You can see Meta. You can see the SPY on the left. All right, guys, 2 minutes before Meta earnings. Meta earnings are actually scheduled for 4:05. But again, if you haven't checked out Moomoo, if you open up an account and deposit $100, you get 5 free stocks. If you open up and deposit 1,000, you get 15 free stocks. If you open up and deposit over 5K, you get the previous 15 free shares of a stock plus free share of Google or Tesla. And I did get Tesla. And some of my free shares were nice. I had like Palantir in one of them and some other ones. So not bad free shares from Moomoo, and zero commission. And the platform is really nice, really useful. Zero commission stock trades open the entire time in pre-market. And their news, there's Paperfolio section, allows you to like follow profitable traders, check out their portfolio. You can look up a ton of different stuff and just really useful. And so if you want to check them out, again, here's the link. Yeah, I mean, Harsh, you're just waiting to criticize me about Moomoo. You brought up Moomoo a couple times over the last few minutes, and that seems to be the only thing you talk about. And so if I do a plug 30 minutes after I start the stream for Moomoo, you shouldn't cry about it. If you do it again, you'll get banned. Good day to you, sir. Joe Rogan is training Mark? Is he really? Again, here's the numbers about to drop, or at least here's some of the numbers. Again, right now, specifically ENVX is supposed to drop right at 4, but Meta's not going to come out until 4:05. So let's watch for the closing volatility, guys. Watch for the closing volatility. Let's see what happens. GSP, the guy, the GOAT, the great. I don't think GSP was the GOAT, though. I don't think he was. Maybe at the time he was arguably there. I think John Jones is the GOAT. Here's the closing bell, though, today, guys. Meta still not out. Watch for big spikes of volatility here. We got Meta today. We also have eBay, which I would imagine their symbol is eBay, right? It's got to be. Okay, so there's eBay. eBay looking okay. Watch for Meta volatility spikes. I don't know. Vote on the poll if you want. 62% are bullish, 38% are bearish on our poll. We did a Twitter poll also. Meta spiking up to 299.90s. Hey, thank you so much for all the follows that we got today. Thank you. We appreciate it. All right, so there's Meta. There's the closing bell. There's eBay sitting right there. We're waiting for these numbers to drop. I'm kind of sitting tight. I'll report them. Tesla is currently under investigation by the California AG over autopilot safety and marketing, according to CNBC. That news just dropped. All right, so Meta consolidating at 299.40s right now, waiting for the earnings. The earnings actually aren't scheduled to drop until hey, what's up, Shepard? Nice. Yeah, Meta's Moomoo's incredibly useful. Like I showed people this earlier. Like here's Moomoo right here. But like again, they're incredibly useful. Look, like let me show you. Is it behind? No. Okay. All right, so Meta's still pushing up to 299.90s here, guys. 299.90s. Sorry, I gotta find the window. There it is. I think the most useful aspect of Moomoo here is like, look. So I go to markets here. I can see a heat map. I can see the best performing sectors. If I expand it, I can look at pre-market rankings, after hours, hot stock rankings. Their paperfolio section, I think, is the coolest part. I can follow traders and then see what they're doing, see what their portfolio looks like, depending on the month, the day, the year. You know, see which ones are doing the best. You know, see what they're holding. And I think that's one of the most useful. Plus their news section and their economic calendar is just really useful and really easy to use. People ask me where I get my sources from, and Moomoo is one of them. All right, guys, earnings are scheduled for 4:05 p.m. Meta over 300 right now. Freaking spam, man. Y'all stop spamming. Sheesh. All right, guys, Moomoo up to 300.2s, 300.3s. They're dropping at 4:05. They should be dropping theirs in 1 minute. Exactly 1 minute, guys, for Meta. 1 minute. Nothing really out big for earnings yet. All right, so there's Meta on the right. We got eBay on the left. We got Chipotle dropping theirs at 4:10 market time as well. Beating good guidance. Yeah. I mean, I think like some of the obscure ones you might have to pay for, but most of them are free, Clark. Like I think if you want like real-time data in certain markets, you like certain like overseas markets and stuff, you got to pay for them. But I think most of the US ones are free. All right, so Meta back at 300. They should be dropping their numbers right now. All right, so watch for volatility right now. This is when their numbers should be out right now. 305 is when they scheduled them to drop. So we're right at 300 right now. Watch Meta, see if we get some opening volatility. Look at the spike. I told you guys, look at the spike in both eBay as well. Spike up to 317s for Meta. 317s. All right, so the reports are out. Revenue came in at 31.9. Let me make sure this is right. Meta came in at 31.99 billion for revenue. 31.99 billion. So higher than expected revenue for Meta. 2.98 EPS versus 2.91 expected. So better than expected on both fronts. Meta is flying up on that news. There's the numbers right there. 323s right now. 323s for Meta. Huge pump. Big pop. Yeah, huge beat. Up to 323s. 323s. We're going to put this up on screen so you guys can see it. All right, up to 322s, guys. 322s. Down to 317s. Flying up here, guys. I'm going to throw this in sub-only mode. I'm pretty sure this is going to get rid of some of the trolls here. Today we've had a lot of trolls. My guess is like, again, I think some people like, again, my guess is like, I think some people really want to work with my channel. Maybe I know them in person, in public here. Maybe I know like in the woodlands, you know, and like when I don't let them work for my channel, they lash out like a child. I think that might be what's going on with some of these trolls, just based off of some of the comments I've seen. And it's unfortunate, but it is what it is. But sub-only mode should fix that. Again, we got a big pop. We're at 320s right now for Meta. 320s. Drum who? Yeah, 20 shares is probably a pretty nice move. You're gonna be up at least $100 right now, or you're gonna be up more than that. What a huge move, man! To 320s from 299. I didn't realize. I didn't even realize it was this big. Huge move for Meta, guys. Huge move. Meta at 318s. Yeah, Meta flying up, guys. All right, we're at 318s right now, 317s. Yeah, Zuckerberg, man, loving life right now, dude. Honestly, Meta's flying up. Will it hold its gains, though? I guess is the question here. We did a poll, beat or miss, or bull or bear on Meta. 68% were bullish, 32% are bearish. Does it hold its gains? I guess is the next question here. And again, the earnings call is going to be streamed here live, starting at 5 a.m. or 5 p.m. I'm sorry. But yeah, Meta with a great number. They guided for revenue for the third quarter at 32 to 34.5 billion versus 31.5 billion estimates. So their guidance came in noticeably better than expected. You can see the guidance we're putting up on screen. Quarter three revenue, much better than expected. Meta says, quote, we anticipate our full year 23 total expenses will be in the range of 88 to 91 billion, increased by a prior range of 86 to 90 billion due to legal related expenses recorded in the second quarter of 23. So again, I'm putting this up on chat. All right, so down to 314s now. Are we going to hold these gains for Meta? All right, so look at the turn down, guys, down to 311s here. 311s for Meta. Huge move. Will we hold? Guys, will we hold? Look at the huge turnaround, guys. Down to 307. Profit taking starting to happen. eBay breaking down. I think eBay missed. But look at the profit taking start to happen, man. Breakdowns going on here for Meta. Down to 307s. Crazy volatility right now. This candle wick went all the way down to 298s again. That's a crazy correction back down to the previous level. 306s right now. 305s. All right, down to 304s. Guys, 304s just tapped. Wow. What a downturn here. We are now effectively green on our Snapchat trade, too. Snapchat, back up to 1070s. Shout out to everybody who told me not to buy. Meta at 305s, man. What a huge run up and then a huge downturn here. Is there value in buying up Meta right here, guys? Is the question. $301s all the way back down to 301s, team. Wow. 300s again, guys. We're all the way down to 300s. 299s. Breaking all the way back down from $325 down to $300, guys. Meta just dropped $25 a share, right? And so to figure out the percentage here, math-wise, you would do 325 divided by 3. Or no, that's wrong. You do 25 times 0.3 roughly, because it's about a third. Or it's 0.33. So Meta just dropped about 8%, down from 325 down to 299. It's a big drop. It's a rough estimate, just quick math, but that's a big drop, man. Wow. Will it hold now? Is the question. What a crazy run. And then a pullback here. Yeah, what a crazy run, man. Starting to bounce a little bit, though. We're starting to bounce back up some here. Fine. The pullback is a double beat and raise guidance. I think there might be some validity in that. What a crazy volatile move here. Meta back up to 307s. Such a volatile stock right now, man. Kind of crazy. Meta popping back up. All right, so I did buy the dip. My average is 306.30s. We're at 307s. We're riding this up. 310s. Took a little piece of it off. You love to see it. What a crazy volatile move. Remember, the Meta earnings call is going to be starting pretty soon here, team. Looks like that dip buy was the right move. We already took profit on it already. And we're still watching this thing pump up. My average price on Disney is $85.22 right now, currently. $85.22, but that's with me buying the dip, taking profit at the 91s, adding back on the dip down yesterday to 85.16s. My average price is $85.22. So I got a really nice average there, and I'm not lying. I'll show you. I'll show you my actual average for Disney right here. So here's my Disney trade. Average price is 85.2223, whatever that is. Man, look at Meta rip it up. I get an overreaction, sell off, and then dip buy. Turned out really nice. To trade in after hours, you have to put in a limit order. You can't use market orders, but you can use limit orders. You got to change the time and force to EXT too. Hit the live button next to the play button, Dean, to catch up, man. Every time people are like, oh, you're on delay, and they try to get really critical, but it's you, man. You just paused or lagged on the stream. Hit the live button. It'll catch you back up, bro. All right, so here's another pullback to 310. Let's see if the 310 psychological level will hold for Meta. eBay also dropped their numbers here. For Reality Labs, we expect operating losses to increase meaningfully year over year for Meta. We're putting some other catalysts up in the chat. They said they anticipate growth in payroll expenses as we evolve our workforce composition towards higher cost technical roles. Well, yeah, there's a slight delay, of course, Dean. It's not going to be completely live. No stream on YouTube is going to be, man. So I'm not sure. I don't know if you're just trying to argue, which is kind of what it seems like, or if you have a genuine complaint, but, you know. Cheers to you, sir. Again, Meta at 310s. Let's see if it bounces there. Yeah, what you realize very quickly is that the internet's, lack of a better word, emotional. Okay, well, I think Dean is probably, my guess for Dean, and I can't tell if this is true or not, but my guess with Dean is that he's somehow like really delayed on the stream. Again, if you hit this button right here, guys, for all my YouTube newbies out there, if you hit this button right here, if you hit this live button right here, and if your live button is red, that means you're caught up on stream. The delay should be very minimal, like a second or two, if that's the case. If your live button is gray or whatever, then you are behind on the stream, kind sirs and madams. Okay, you're behind on the stream. Meta trying to hold the 310 level. Geniuses out here. You know? Best Meta sympathy stocks? What do you guys think will move with Meta sympathy wise? What the heck is this? I'm sorry, guys. This is supposed to be instrumentals. I don't know what just played, but it wasn't freaking instrumentals. So we're going to change that. My apologies. Yeah, y'all want to make sure you're called back up on the stream. Yeah. Yeah, it's really funny because, like, sometimes, and again, I'm just kind of hanging out. We got 40 minutes before the actual earnings call starts. Somebody's asking me when the earnings call starts, so we got 40 minutes. So I'm just kind of BSing talking with you guys. But yeah, I mean, it's really funny because you'll get some people that are just so critical. Like, they're just really having a bad day, or, like, you know, for whatever reason, they just need some, they need to, you know, project their problems on you for whatever reason throughout that day, which happens a lot, which is okay. I'll be your therapist. But you'll get the people that are just super angry about it. They're like, this guy's stream is 30 minutes delayed. What the heck? And they're super angry and calling me names and stuff. And then I tell them like click the live button. Like, hey, just click the live button. You know, you're delayed on stream. Maybe you paused it. Maybe you had lag. And then it's just kind of crickets and silence, you know. I respect the ones that are like, hey, my bad. Like, you were right. But most people don't have that type of maturity, I think, you know. Yeah, it could be cell signal. It could be a lot of different things, to be honest. But again, if you hit the live button, one of the things that you could also do, here's another hack for it, is if you put it in, if you increase the speed of the stream. So if you go to like 1.25 speed, it'll automatically catch up on the stream anytime you have lag or pauses or whatever, right? So that's something else you could do. It's super helpful. You don't need to answer this. Yeah, I mean, but I kind of make content when I can. So like if I could be dramatic and make content, I will, you know. As well as like I'm sitting here for hours. Today I've been sitting here for like 8 hours. There's Meta ripping up to 313s, guys. 313s. Yeah. When is Disney earnings? I'm not sure when Disney earnings are going to be. Disney earnings are August 9th, so we got like 2 weeks, maybe a little bit over 2 weeks. I'm trading with Mumu. Man, Meta up to 314s, guys. 314s. Crazy good move from Meta, man. Honestly, very volatile though. It went to 325s, back down to 300, back up to 315s. And so it's been going up and down almost 10% in after hours today for Meta. That's a big percentage for Meta. It's not small. All right, so yeah, so we got Meta at 312.30s, 312.30s. So it looks like Dean just now called up to the to me saying, "Hey, hit the live button." Hey, what's up, Dean? You back live with us now, huh? You've been complaining. Meta moving like futures. Honestly, Meta's moving incredibly volatile. So y'all just be careful. Like 100 shares right now can lose you tons of money. So just be careful. Scale down when the volatility's high, guys. I'm not in Meta, but I'm scared. Yeah, I took the dip buy. All right, we got the actual earnings call that's going to be at 5 p.m. today. 5 p.m. today. So this is Mumu. You can check the link in the on top of the chat if you want to see it. What platform are you watching after hours? Why do you think Meta is so volatile? Because number one is Meta. Meta is typically a pretty volatile stock. Number two, they had the introduction of Threads, the new social media platform, as well as they did much better than expected in increased guidance. And so typically, like, you get some big emotional reactions to stuff like this in after hours, and that's kind of what we're getting. Should be at 380 with these earnings. What's the PE ratio of Meta right now? I'm checking it out. And again, the full call is going to be streamed at 5. Okay, gotcha, man. Let me check it out. Yeah, I saw that. I saw that pawn. I talked about it a little bit before. He said he was dizzy. It was a dizzy spell, is what he said. So I don't know. 36 PE ratio. That's really not that bad, though, man. Like, despite Meta going 3x in the last year or so, a 36 PE is not that bad. You know, like, it's really not that bad. What do you guys think? I'm used to crypto. Stocks are tame, in my opinion. Y'all are calling dollars volatile. Well, they are volatile. Crypto's just really, really volatile. In crypto, the risk is much higher. So, like, the point is, like, you can bet on Meta or Disney or Amazon or Google or Apple or whatever, and over the long run in time, all these different things are almost certainly going to go up long term, right? That's not the truth with crypto. With crypto, you got two that you know for sure are going to be fine. And you can say, the other ones are going to be fine. You hear people all the time, oh, this is a sure thing. They said the same thing about, all these obscure cryptos that are now worthless. So the difference between the market is, number one, there's more regulation in the stock market, which means there's less volatility, is ultimately what that means short term. There's less volatile movement short term because of the regulation and a bunch of other reasons, but one of them is regulation. Number two is that, it's just a different niche. But again, 37 PE is not that bad. I mean, especially with how much they've popped up. Like, that's pretty good PE ratio, I think. Their forward PE is 24, which is dirt cheap. Yeah, I think that's very cheap as well. I agree. As a realtor, the ad spend I see on Meta for real estate is insane. Yeah. Yeah, all good, Clark. I agree. I've told people how are into crypto. Well, crypto's good, and we're gonna do a crypto show today after the stream today. So we are gonna do a crypto show today after this one ends. But yeah, it's not gonna be ending until like 5 or so. All right, guys. Meta pulling back down to 310, just still volatile. Let's see if 310 holds. I think 310 is like a psychological level that makes sense to watch. Yeah, I'm not gonna be able to see all the comments. Again, if you seem to be too toxic, you're just gonna get banned out of here, man. Again, I got 1,000 people here, so I'm not gonna be able to answer every comment and change every little aspect of my screen that people don't like. In the end, you gotta just be reasonable, which I think most people are, but you always get some bad apples that are just kind of weird and neurotic, I guess. And I think over time that kind of makes me biased against them. Meta bouncing at that 310 level. I think that's a natural support level. eBay with a really bad reaction here. Looking at the eBay numbers. All right, so Meta monthly active users came in at 3.03 billion versus 3.01 billion expected here. Looking at eBay's numbers. eBay posted better than expected results. I'm not sure why they dropped so much. I don't like eBay as a company, though. I think eBay's probably on its way out, but who knows for sure. Yeah, I don't know why it was up in the first place, MCOC, talking about the penny stock. I saw the move. It made like 100% move, but I don't know why. I don't know why I did. PE is price over earnings. So it's how much the company makes versus the price of the stock. Price earnings is what PE ratio stands for. Honestly, guys, I'm also starting to get a little tired, maybe a little grumpy. Like, I've been streaming today since 4:45 in the morning is when I started working on the stream this morning. I got about an hour-long break, and then we started streaming the FOMC meeting, and then that finished, and now we're streaming Meta. And again, no, I'm not going to hire any co-hosts, so please don't reach out to me looking for that. These earnings, big, busy earnings weeks only really happen once a quarter, so it's unnecessary for me to hire anybody else, but I think today's the long one. I'm really excited that I'm going to get to close out this week. Basically, today's the last busy stream I'm going to have to do. I'll have morning streams tomorrow and Friday, but today's the last evening stream I'm going to have to do this week, and I'm already burnt. And we're also going to be doing a crypto show today. And their earnings call starts in less than 30 minutes. Chipotle posted 1265 EPS versus 1231 expected, revenue of 2.5 billion, expected 253 billion, 2.51 billion versus 253 expected for Chipotle. Quarter 3 SSS view is low single digits to mid single digits. Yeah, I'm excited about that. I don't know about Robinhood, man. I mean, I'm not saying eBay's not usable. I just don't use it, you know. All right, so again, Meta back at 311s here, 311s. Well, crypto doesn't really report earnings. I mean, they do, but it's not in the same. Like one of the bad parts about the market is that there's more red tape. One of the good parts about the market is that there's more red tape, and so companies have to report their earnings quarterly, and which in crypto it's not really like that. So you don't really know how much these crypto platforms are bringing in all the time. Not sometimes you do, sometimes they report it, but other times you don't. Hey, thank you, man, I appreciate the donation, man. Thank you so much. The CMEG took a nasty plunge. Did they really? Oh, Chipotle. Yeah, I mean, people look at Chipotle and they see it's like a $1,900 stock, and so they're like, "Wow, man, Chipotle must be wildly successful." Not necessarily. Like Chipotle is successful, but like to understand the difference between prices here, you got to understand how many shares. Meta back up to 313s. Yeah, Coinbase reports it, but Coinbase is publicly listed. But yeah, like Chipotle, the float is like in the millions, right? So there's much less shares out there for Chipotle, and so they can put the price at $1,900 a share. But there's so much less shares out there, so that like Chipotle is a much smaller company than like Apple or Meta, and Meta's 313 versus almost 2,000, right? But it just has to do with how many shares are floating around out there, which is called the float. The float is how many shares are floating around out there. And I think Chipotle, I can't remember exactly. I think it's something anywhere between like 10 and 100 million shares in the float versus something like Apple, which has billions or trillions of shares out there in the float. Apple has billions of shares in the float. So not trillions, but billions versus millions. And so that's why sometimes you'll see a stock with a lower price, but it's still worth far more than Chipotle is at almost $2,000 a share. Yeah, I feel like I've heard about it, Justin. I can't remember what that is, or maybe reversal tomorrow, maybe. Possible. Yeah, I mean, eBay is good. I used to have a business, like most of these books on the shelf right here. So if you look at the shelf, You know, like if you look at the shelf right here, you can kind of see my library. You know, most of those books, like I used to run a used book business on Amazon, and we made thousands of dollars a month doing it. Eventually, the market became saturated when everybody started teaching people how to do it. But and so we ended up just kind of liquidating and moving on to our next venture. But I sold on Amazon a lot, and I have a decent amount of experience. Amazon is mostly meant for like retail products, you know, like eBay is mostly meant for like collectibles. Like you're gonna have a better time selling like old books on eBay than you are on Amazon. You know, Amazon you're gonna have an easier time selling just basic retail books. You know, so eBay still has a use case for it, but I think over time the sales numbers are dwindling down relative to the competition of like Amazon and all the other ones. And so with that, I don't think that's a good sign for eBay, and I don't think it's a company that I necessarily want to hold long term. But you know, I could easily be wrong about it. Yeah, I mean, my wife knows how it goes. He said, I thought about that earlier. I said, your wife is really understanding for you to be locked in a room all day with her big earnings. Yeah, I mean, she understands. Like, to be honest, I'm living my dream, man. I really do have a beautiful life, man. I could sit here and talk about the stock market for 3 or 4 hours a day and then close up shop for the day and be done most days. Some days we got big earnings during earnings season that we got to dedicate more time to it. But for the most part, every day I'm done. I got 4 hours of streaming done, and then that's it. I talk about the stock market on my computer for 4 hours, and I'm probably make more than, you know, most people do. I'll say that. I'm not going to say how much, but point is, she appreciates it. She knows that I've kind of got it made doing this, and we're going to keep the growth up here. Listen, we provide a service. It's not like we're just like we provide a service. We give you free content, free economic data. The reason we get thousands of people here is because we're reliable. People know we're going to cover the big economic news and earnings. And so if you haven't already, guys, subscribe, hit the notification bell. We appreciate the love and support. Do you have a day job? I do a couple different things. I'm a licensed real estate agent here in Texas. I also do some software work, programming software work. I got a bunch of different income streams, to be honest. Hey, thank you, Brian. Thank you so much, man. All right. This guy's just got to go. Good day to you, sir. You're just kind of trying to stir up stuff. Hey, thank you so much, Canyon. I appreciate it, man. Thank you so much. Definitely top 3 for sure. How many hours? I'm a big sleep guy. I need my sleep. I usually get at least 7 hours of sleep. All right, guys. Meta consolidating. It kind of looks like almost like a flag pattern here. Looks like a Dorito chip, right? What's your top 3 Dorito chip flavors in the world right now? Look at that Dorito chip flag pattern. Looks good. We'll see if it holds. Honestly, 310 seems to be a support level. We'll see if it actually does or not. Is it a bull or bear flag? I think it could be. It's pretty symmetrical, right? To me, it looks kind of symmetrical. So if we put this up, to me, it looks a little bit symmetrical. Like that looks pretty symmetrical to me. But again, maybe not. I don't know. We're just kind of drawing stuff. No, the flag pattern doesn't necessarily mean it's going to break out in any one specific direction. It just means that support and resistance numbers are getting pushed closer and closer together. And so sometimes there's a break, other times there's not. Usually the best way to approach triangles and flags is to attack the triangle while it's in it. Once it breaks the triangle, you don't really know what it's going to do. Yeah, just trade small lumper. I mean, with top step accounts being $50 though, I mean, it's not that hard to, try and fail in 3 of them. Do you do programming stuff anymore? I do a little bit. I do some small jobs here and there, like JavaScript and React Native. Front end mostly. I'm not much of a back end programmer. I just run out of time now, to be honest, because like I really like again, I work for 4 hours doing this, but then I'm also a real estate agent, and then I also do programming stuff. So I just run out of time. And once like at this with me, it's like I got to really strategize how I want to spend my time, because I got 2 kids and I'm married as well, so it's just a lot of work. Nice grab. Yeah, Viva La front end for sure. All right, guys, less than 20 minutes. Less than 20 minutes. What you enjoy doing the most? Hanging out with my family mostly. Honestly, and I love my sleep, dude. I really do. Anyone know why Meta dropped from highs? Thank you. Probably just selling pressure. Like imagine, like you got to put it psychologically, right? So imagine you entered Meta here, you know, or even better, imagine you entered Meta. Imagine you entered Meta way back here at 180s, you know, and you finally get a spike up to 325 short term. Imagine you bought positions right before the close today. What are you going to do when you see it spike up to 325 and you're short term in that trade? Most people are going to say, hey, I'm going to take a little piece off. Right now, imagine you start to scale out, but you haven't quite done it yet. And imagine you see this drop start to happen right here. What are you going to do? Right? I'll tell you what most people are going to do. Most people are going to freak out and sell. And that's when you get the boom drops, you know. And then some people say, hey, is this cheap down here? And they buy it up, and then it bounces right back up there. And now we're just kind of choppiness. I'm like John Madden over here. But yeah, that's what happens. Exactly what I did. I'm telling you, man. Listen, I'm not. You got to think about like there's different levels to trading. Once you do it long enough, you start to really think about the psychology behind this stuff, you know, and then you could bet on the psychological moves that happen, and that's one of the best ways to trade is when you start recognizing those type of moves. Now you got to be careful. The biggest thing you want to do in trading though is limit your size in volatility, and this is volatility, so you want to trade small. A lot of gamblers are justifying gambling, you know, where if they didn't trade the stock market, they put it all on red and roulette or something, you know, but because it's trading, you know, somehow it's legitimate. But they're just doing the same thing they would, which is just risking big money, trying to get cheap thrills, maybe not so cheap thrills, but a lot of people are doing that for sure. Again, I talk about it all the time. Like one of the things that traders do is the martingale roulette strategy in trading, right? If you don't know what martingale is, I've talked about this probably 1,000 times already, but I'll go over it again because I think it's very important for traders to understand something that, you know, I don't think a lot of people are going to be able to really admit to themselves that this is what they're doing, but I think if I say it enough, it'll really click eventually, which is that a lot of traders are trying to look cool on the internet, and so they're just kind of doubling down and tripling their size. So like the martingale roulette strategy, you double your bet every bet until you win, right? So like you bet $10, you lose, you bet $20, you lose, you bet $40, you lose, you bet $80, you lose, you bet $160, and you keep going until you win, right? Until probability wise, you got to lose like 6 or 7 times in a row to actually lose. And that might seem like it doesn't happen, but it does, you know, and eventually you're going to lose way more than you ever could have just trading smart, you know. And in trading terms, they do the same thing where it's like they let it dip and they add to it, they let it dip and they add some more, they let it dip and they add some more. And sometimes I'll do this if I have a big cushion on the day and I'm trying to get funded, you know. That's one of the things I do, but only when I have a huge cushion on the day will I ever do this. But a lot of people just do it every day, and to some, they might not even realize that they're not really profitable, that it's artificial profits, right? Like they're to them, they're making money almost every trade, and they're making big money, and they're like, wow, I'm just the greatest trader ever. And they start to plan their future around these profits that they're making. But it's kind of like they're not really making that money. Anybody can keep adding size until they win, right? But eventually you're not going to win, and it's going to take your entire account out. And that's what a lot of these guys don't realize. And a lot of them are just trying to look cool on the internet. But that's the reality of it. And so again, in trading, you got to have a risk. You got to have a risk system in place to avoid that type of behavior, because it's very tempting to do it. If you're down big and you know you can double your size and win your money back, probably, it's very difficult not to do that. But again, you have to build risk systems around it, or you're just going to destroy your account. You're going to destroy every account you ever build, and that's what really gets traders. Most traders can make money and find profitable strategies, but they make money and they make money and they make money, and then they have a huge losing day where they just double their size and triple their size and lose big, and they have these massive drawdowns in their account that they're not able to actually come back from. That is really what gets most traders. Yeah, it only works until it doesn't, and that's really how it goes down. Yeah. So again, just learn that's not a real system. A system that, like, one thing you can do if you like trading like that, again, what I do is I build up a cushion and then I do that, right? But I don't do it like infinitely. I build up a cushion of $200 or $300. Meta starting to break down. It's at 310s right now, but I'll build a cushion of like $200-$300, and then I'll slowly scale into a position doing that, where like I try to buy a dip with one contract in futures. If it keeps dipping, I'll add 2 contracts. If it dips some more, I'll add the 3, and then I'll stop, and then if it doesn't work out for me there, if I have a large enough cushion on the day, I go from being up $300 to just break even. So it's not the end of the world, or a small loss. And that's opposed to just taking huge size and doing that without a cushion, and then you're just down $600-$700. So there's ways to do it, but a lot of traders are just doing that every day, and then they think they're just the greatest traders ever, and they're making these huge percentage returns, and they can make 10% a day or whatever it is, and then the check comes. And they end up just destroying their whole account. Do you have a rule as to when you would use the tactic you just described? Only when I have a huge cushion on the day will I ever do that, Brian. And again, like I said, the way I explained it is like there's a limit. Like I'll add up to 3 times if on a dip, and then I'll stop. And it's only if I have a big enough cushion on the day to justify that risk. But it's certainly not every day. Never used them, Michael. Yeah, I mean, it's happened to me before for sure, Chef. It's happened to every trader for the most part when they first learn. Eventually, traders evolve from that, but yeah, it happens for sure. What's your take on the Fed rate hike? I mean, 25 basis points was overwhelmingly expected. I think the rate hike press conference was pretty neutral. They said some good things, like we have a path to not hitting recession this year, and they said some bad things, like inflation is transitory. So I thought it was pretty neutral, to be honest. But I cover all of them, so to be honest, at a certain point, they all start sounding the same. Ended up big holding on to Tesla after earnings. Now, there's a difference between doing what I just said, day trading. Meta starting to pop back up. It's at 311s. There's a difference between doing what I just said in terms of day trading and adding and dollar cost averaging into long-term positions. Like DCAing long-term into specifically blue chip companies is fine, in my opinion. It's subjective, I guess, but like dollar cost averaging into long-term positions is fine. If they're blue chip healthy companies, like buying Apple every big pullback and sitting on it no matter what is okay, I think, to be honest. Not no matter what, but like within risk, sitting on it long term is fine. And so you could use the same strategy with your long term positions with dollar cost averaging, but don't ever do it with penny stocks. Never do it with mid caps. Only do it with large cap, blue chip, healthy companies that you know and understand and that are obviously going to be around in 5 or 10 years. If you do it there could be some edge there, but again, you gotta have patience and buying power to sit on, which is a different thing. Yeah. Binance showing imminent crash. Yeah, I don't know, man. I've heard that for a lot of different things over the years. I'll believe it when I see it. And I'm not saying you're wrong. I just don't believe it right now. We're almost up to 30K on crypto currently. We're going to be doing a crypto show today after the stream ends too. We got 10 minutes, guys, until the actual earnings call. All right, guys, 9 minutes, a little bit, really about 8 minutes here, team. How should we build the cushions in the first place? Well, for that, you got to figure out some profitable strategies. Chipotle just broke lows. Again, I'm not an investment professional. I'm not liable if you lose. I have no idea what I'm talking about. I might be wildly wrong about anything and everything I say in any stock I talk about. So don't copy me. You can read it scrolling on the bottom of the page too. How should we build the cushions? I'm not sure. I typically like to attack trends. Specific trends is usually what I look for. I just look for a trend and attack it. That's it. You know. There's a lot of ways to attack trends. I use the VWAP, the 200 EMA. I use the opening range highs and lows. I use pre-market levels to watch as well. And I just try to find a consistent trend and then attack that trend. In that regard, you got to avoid choppy days. And, trends are obviously there. And so, the big problem most people take is they try to trade reversals and all this other crap. You just need to attack trends using trend indicators like the VWAP and the moving averages. No. It's not a choppy day. Meta's up big. Maybe the market hour days was choppy, but it was leading into earnings. So a lot of the time ahead of earnings, we get apprehensive trading because of fear of earnings surprises. Yeah, I mean, extension's definitely fine to attack, but that's mostly for my long-term trades is extension. Like I look for long-term extended stocks on the downside is usually my favorite way to take swing trades and investments. But in day trading, it's just a different thing. All right, guys, we got 6 minutes. 6 minutes. Again, earnings call scheduled for 6 minutes. I don't like PayPal as a company though, Justin. I don't trust it. It's not. There were some times when I bought the PayPal dip, like when PayPal was down at the 50s and 60s, I was buying that dip, and I made a little bit of money, I think, from it. But PayPal as a company is incredibly vulnerable to crypto, in my opinion. I think like I can send USDT for $3 a transfer in crypto, no matter how much it was. If I try to send $1,000 in PayPal, it's going to be freaking $50 or something like that. And so I think in that regard, crypto has been creeping more and more into relevancy there for that type of business. And I think that makes PayPal vulnerable long term. But again, it's one of those companies that I think could also do fine long term. Like PayPal might be fine long term. I don't know. I don't trust it. It's not a sure thing. And when I buy blue chips, it needs to be a sure thing. It needs to be something that's obviously going to be around in 10, 15, 20 years. And I don't necessarily think PayPal is one of those things. I think it might be vulnerable to cryptocurrency and competition. I'm not sure, Mike, whether I'm going to trade it. Yeah, technicals look good. It's extended on the downside. I mean, I think the PE ratio is still pretty solid for PayPal. But again, I also think there's risks. And I think there's just a lot of clones of PayPal now that's going to saturate competition and make it risky. I don't know. But again, I might be wrong. I'm not saying it's going to fail or anything. I just don't trust it. I don't trust it to put my money in, to park my money in it long term. I don't know how that's going to end, Adam. We're going to cover that probably during our crypto show. I really have no idea how that's going to end, though. What's the name of what strategy? All right, guys, Meta earnings coming up. All right, so yeah, we're gonna mute the music right now so we can pull the webcast up so we can get this ready here. There we go. Mute the music. Y'all can hear the music, correct? Just now. What strategy, Jack? What strategy? The Martingale roulette strategy. Yeah, I don't recommend using it. It's not a good strategy. It's a bad strategy. It sets traders up for failure. I'm certainly not recommending the Martingale. It doesn't work. The Martingale roulette strategy doesn't work. But that's my point, is that it doesn't work. You'll destroy your account. You might think losing six times in a row is low probability, and it kind of is to a certain extent, but it happens. You're going to lose eventually, and you're going to lose everything plus more sometimes, you know. And so again, I'm not recommending the Martingale strategy. It's a terrible strategy. It doesn't work, you know. Oh, thanks, Pawn. Yeah, I do have to switch headphones. You're right. These have actually had a pretty good battery life. All right. There we go. We're going to do a sound check. Let me know if you can hear the music now. Yeah, well, craps is even worse. Music's on. Okay. All right, good. Here, I'm gonna fix this just in case, so I don't not stream music or whatever it is. There we go. All right, guys. So here's Meta. All right, so Meta earnings call is about to be in progress right now. I'm gonna turn the music off, and then I'm gonna mute this so I can see exactly when this thing starts. All right, guys. Meta earnings call about to start right now. All right, so we're at 314s roughly for Meta. Yeah, I don't think Snap's necessarily sympathy. I'm up nicely on my Snap trade today, though, relative to where we were.
Good afternoon. My
Sound
name
check.
is Dave, and I will be your conference operator today.
Let me know how the
At this
sound is.
time, I would like to welcome everyone to the Meta second quarter earnings conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question, please press 1, then the number 4 on your telephone keypad. This call will be recorded. Thank you very much. Ken Durrell, Meta's Director of Investor Relations, you may begin.
Thank you. Good afternoon, and welcome to Meta Platforms' second quarter 2023 earnings conference call. Joining me today to discuss our results are Mark Zuckerberg, CEO, and Susan Li, CFO. Before we get started, I would like to take this opportunity to remind you that our remarks today will include forward-looking statements. Actual results may differ materially from those contemplated by these forward-looking statements. Factors that could cause these results to differ materially are set forth in today's press release and in our quarterly report on Form 10-Q filed with the SEC. Any forward-looking statements that we make on this call are based on assumptions as of today, and we undertake no obligation to update these statements as a result of new information or future events. During this call, we will present both GAAP and certain non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in today's earnings press release. The press release and an accompanying investor presentation are available on our website at investor.fb.com. And now I'd like to turn the call over to Mark.
Thanks, Ken. Thanks, everyone, for joining. This was a good quarter for our business. We're seeing strong engagement trends across our apps. There are now more than 3.8 billion people who use at least one of our apps every month. Facebook now has more than 3 billion monthly actives, with daily actives continuing to grow around the world, including in the US and Canada. In addition to our core products performing well, I think we have the most exciting roadmap ahead that I've seen in a while. We've got continued progress on Threads, Reels, Llama 2, and some groundbreaking AI products in the pipeline, as well as the Quest 3 launch coming up this fall. We're heads down executing on all this right now, and it's really good to see the decisions and investments we've made start to play out. On Threads, briefly, I'm quite optimistic about our trajectory here. We saw unprecedented growth out of the gate, and more importantly, we're seeing more people coming back daily than I'd expected. And now we're focused on retention and improving the basics, and then after that, we'll focus on growing the community to the scale that we think is going to be possible. Only after that are we going to focus on monetization. We've run this playbook many times before with Facebook, Instagram, WhatsApp, Stories, Reels, and more, and this is as good of a start as we could have hoped for. So I'm really happy with the path that we're on here. One note I want to mention about the Threads launch related to our year of efficiency is that the product was built by a relatively small team on a tight timeline. We've already seen a number of examples of how our leaner organization and some of the cultural changes that we've made can build higher quality products faster, and this is probably the biggest example so far. The year of efficiency was always about two different goals: becoming an even stronger technology company and improving our financial results so we can invest aggressively in our ambitious long-term roadmap. Now that we've gotten through the major layoffs, the rest of 2023 will be about creating stability for employees, removing barriers that slow us down, introducing new AI-powered tools to speed us up, and so on. Over the next few months, we're going to start planning for 2024, and I'm going to be focused on continuing to run the company as lean as possible for these cultural reasons, even though our financial results have improved. I expect that we're still going to hire in key areas, but newly budgeted headcount growth is going to be relatively low. That said, as part of this year's layoffs, many teams chose to let people go in order to hire different people with different skills that they need, so much of that hiring is going to spill into 2024. The other major budget point that we're working through is what the right level of AI CapEx is to support our roadmap. Since we don't know how quickly our new AI products will grow, we may not have a clear handle on this until later in the year. Now, moving on to our product roadmap, I've said on a number of these calls that the two technological waves that we're riding are AI in the near term and the metaverse over the longer term. Investments that we've made over the years in AI, including the billions of dollars we've spent on AI infrastructure, are clearly paying off across our ranking and recommendation systems and improving engagement and monetization. AI recommended content from accounts you don't follow is now the fastest growing category of content on Facebook's feed. Since introducing these recommendations, they've driven a 7% increase in overall time spent on the platform. This improves the experience because you can now discover things that you might not have otherwise followed or come across. Reels is a key part of this discovery engine, and Reels plays exceed 200 billion per day across Facebook and Instagram. We're seeing good progress on Reels monetization as well, with the annual revenue run rate across our apps now exceeding $10 billion, up from $3 billion last fall. Beyond Reels, AI is driving results across our monetization tools through our automated ads product, which we call Meta Advantage. Almost all our advertisers are using at least one of our AI-driven products. We've also deployed Meta Lattice, a new model architecture that learns to predict an ad's performance across a variety of data sets and optimization goals. And we introduced AI Sandbox, a testing playground for generative AI-powered tools like automatic text variation, background generation, and image outcropping. Business messaging is another key piece of our monetization strategy, and we recently announced that the 200 million users of our WhatsApp Business app will now be able to create click-to-WhatsApp ads for Facebook and Instagram without needing a Facebook account. This is a pretty big unlock, particularly in countries where WhatsApp is often the first step to bringing a business online. Paid messaging is a bit earlier, but it's also showing good adoption. The number of businesses using our paid messaging products has doubled year over year. While we're on messaging, I'll mention that we started rolling out channels on WhatsApp last month. It's a simple, reliable, and private way to receive important updates from people and organizations, and I'm quite excited for more people to try it as we bring the product to more countries through the rest of this year. Beyond the recommendations and ranking systems across our products, we're also building leading foundation models to support a new generation of AI products. We partnered with Microsoft to open source Llama 2, the latest version of our large language model, and to make it available for both research and commercial use. We have a long history of open sourcing our infrastructure and AI work from PyTorch, which is the leading machine learning framework, to models like Segment Anything, ImageBind, and Dino, to basic infrastructure as part of the Open Compute project. And we found that open sourcing our work allows the industry, including us, to benefit from innovations that come from everywhere. And these are often improvements in safety and security, since open source software is more scrutinized and more people can find and identify fixes for issues. The improvements also often come in the form of efficiency gains, which should hopefully allow us and others to run these models with less infrastructure investment going forward. So I'm really looking forward to seeing the improvements that the community makes to Llama 2. We are also building a number of new products ourselves using Llama that will work across our services. I'm going to share more details on that later this year, but you can imagine lots of ways that AI can help people connect and express themselves in our apps. Creative tools that make it easier and more fun to share content, agents that act as assistants, coaches, or that can help you interact with businesses and creators, and more. And these new products will improve everything that we do across both mobile apps and the metaverse, helping people create worlds and the avatars and objects that inhabit them as well. Our investments in AI continue. We remain fully committed to the metaverse vision as well. We've been working on both of these two major priorities for many years in parallel now. And in many ways, the two areas are overlapping and complementary. The next big thing on the Reality Lab side is the launch of our Quest 3 mixed reality headset at Connect. It's our most powerful headset yet, with better displays and resolution, and next-gen Qualcomm chipset with twice the graphics performance. It will also have the best immersive content library out there, and it's 40% thinner than Quest 2. Its mixed reality seamlessly blends your physical world and the virtual one by intelligently understanding the physical space around you. We pioneered mixed reality with our Quest Pro headset, and Quest 3 takes that to the next level. Now, others in the industry are, of course, working on bringing mixed reality to the market too, but Quest 3 is going to be the first mainstream accessible device that we expect many millions of people will get to experience this technology with. The metaverse content and software vision continues coming together as well. We recently announced that Roblox is coming to Quest with an open beta on App Lab. For Horizon, the team is focused on retention right now, and we're making good progress on that. We've made big improvements on avatars as well, and that's going to be a bridge between our mobile apps and our VR and mixed reality experiences. We're going to have a lot more to share on both our metaverse and AI work coming up at our Connect conference, which we're going to be hosting in Hacker Square at our headquarters on September 27th. It's going to be a good one, so I hope you tune in. All right, to wrap up, I just want to say that I'm really proud of our teams for everything that we've accomplished so far this year. It's been a tough year in a lot of ways, but it's also been an impactful one. I'm quite optimistic about the road ahead, and I'm grateful to all of you for being on this journey with us. And now I'm going to hand it over to Susan.
Thanks, Mark, and good afternoon, everyone. Let's begin with our consolidated results. All comparisons are on a year-over-year basis, unless otherwise noted. Q2 total revenue was $32 billion, up 11% or 12% on a constant currency basis. Q2 total expenses were $22.6 billion, up 10% compared to last year. In terms of the specific line items, cost of revenue increased 15%, driven primarily by infrastructure-related costs. R&D increased 8%, driven mainly by headcount-related costs from our Reality Labs and Family of Apps segments, as well as restructuring costs. Marketing and sales decreased 12%, due mostly to lower marketing spend and payroll-related costs. And G&A increased 39%, due primarily to an increase in legal accruals, which was partially offset by lower payroll-related costs. We ended the second quarter down 7% from the first quarter. Our second quarter headcount still included roughly half of the approximately 10,000 employees impacted by the 2023 layoffs. We expect that our third quarter headcount will no longer include the vast majority of impacted employees. Second quarter operating income was $9.4 billion, representing a 29% operating margin. Our tax rate for the quarter was 16%. This is lower than our previous full-year outlook, as our higher share price provided a higher tax deduction and lowered our taxes. Net income was $7.8 billion, or $2.98 per share. Capital expenditures, including principal payments on finance leases, were $6.4 billion, driven by investments in data centers, servers, and network infrastructure. Free cash flow was $11 billion, significantly benefiting from a deferral of income taxes that we expect will be paid in the fourth quarter. We repurchased $793 million of our Class A common stock in the second quarter and ended the quarter with $53.4 billion in cash and marketable securities. Moving now to our segment results. I'll begin with our Family of Apps segment. Our community across the Family of Apps continues to grow. We estimate that approximately 3.07 billion people used at least one of our Family of Apps on a daily basis in June, and that approximately 3.88 billion people used at least one on a monthly basis. Facebook continues to grow globally, and engagement remains strong. For the first time, we crossed 3 billion monthly active users, with Facebook MAU ending at 3.03 billion in June, up 3% or 96 million compared to last year. Facebook daily active users were 2.06 billion, up 5% or 96 million. DAUs represented approximately 68% of MAUs. Q2 total Family of Apps revenue was $31.7 billion, up 12% year over year. Q2 Family of Apps ad revenue was $31.5 billion, up 12% or 13% on a constant currency basis. Within ad revenue, the online commerce vertical was the largest contributor to year-over-year growth, followed by entertainment and media and CPG. Online commerce benefited from strong spend among advertisers in China reaching customers in other markets. On a user geography basis, ad revenue growth was strongest in rest of world at 16%, followed by Europe, North America, and Asia Pacific at 14%, 11%, and 10%, respectively. Foreign currency was a headwind to advertising revenue growth in all international regions. In Q2, the total number of ad impressions served across our services increased 34%, and the average price per ad decreased 16%. Impression growth was primarily driven by Asia Pacific and rest of world. The year-over-year decline in pricing was driven by strong impression growth, especially from lower monetizing surfaces and regions. While overall pricing remains under pressure from these factors, we believe our ongoing improvements to ad targeting and measurement are continuing to drive improved results for advertisers. Family of Apps other revenue was $225 million in Q2, up 3%, as strong business messaging revenue growth from our WhatsApp business platform was partially offset by a decline in other line items. We continue to direct the majority of our investments toward the development and operation of our Family of Apps. In Q2, Family of Apps expenses were $18.6 billion, representing approximately 82% of our overall expenses. FOA expenses were up 8% due primarily to legal-related expenses and restructuring charges, partially offset by a decrease in non-headcount-related operating expenses, including marketing. Family of Apps operating income was $13.1 billion, representing a 41% operating margin. Within our Reality Labs segment, Q2 revenue was $276 million, down 39% due to lower Quest 2 sales. Reality Labs expenses were $4 billion, up 23% due to lapping a reduction in Reality Labs loss reserves in Q2 of last year, as well as growth in employee-related costs. Reality Labs operating loss was $3.7 billion. Turning now to the business outlook. There are two primary factors that drive our revenue performance: our ability to deliver engaging experiences for our community and our effectiveness at monetizing that engagement over time. On the first, overall engagement within Facebook and Instagram remains strong. Reels continues to grow and drive incremental engagement. On Facebook feed in particular, recommended content from accounts you don't follow has increased significantly over the past year, while also becoming more incremental to engagement, demonstrating that people are getting added value from discovering content from unconnected accounts. Looking forward, we're optimistic about our ability to increase that value even further by leveraging advanced AI techniques to improve recommendations. In addition to improving the value people get within our Family of Apps today, we're also investing in entirely new experiences for the future. We're standing up infrastructure to support new AI-powered products across our services, which will give people more tools to express themselves and connect. And we've been pleased with the initial reception of our new standalone app, Threads, since its launch earlier this month. Our focus now is on further developing this into a product that will be valuable for a large set of people over time. Moving to the other driver of revenue, improving monetization. Here, we're focused on improving monetization efficiency of products that monetize at lower rates today, like Reels and our messaging services, and more broadly, driving measurable performance and returns for our advertisers. On Reels, we are making good progress on monetization, with more than 3/4 of our advertisers now using Reels ads. We remain focused on further reducing the Reels revenue headwind and narrowing the monetization efficiency gap with our more mature surfaces. However, we continue to expect time on Reels will monetize at a lower rate than Stories and Feed for the foreseeable future, since people scroll more slowly through video content. Within messaging, billions of people and millions of businesses use our messaging services every day to connect. We see a significant opportunity to build tools and functionality for businesses to help facilitate those interactions, and are seeing early but promising progress with WhatsApp's paid messaging solution today. In terms of our work to drive measurable performance for advertisers, it's concentrated in two primary areas: AI and on-site conversions. We're leveraging AI to move our systems towards using fewer, larger models that enable us to leverage learnings across product surfaces and deploy improvements more quickly, broadly, and efficiently. We're also leveraging AI to power advanced ads products like Advantage Plus Shopping, which continues to gain adoption. We're seeing this work translate into results for advertisers as conversion growth remains strong in Q2. In terms of driving on-site conversions, we continue to see strong results with click-to-messaging ads and are well-positioned given our suite of messaging applications. Daily click-to-WhatsApp ads revenue continues to grow very quickly at over 80% year over year. We also recently started testing the ability to buy click-to-WhatsApp ads directly from the WhatsApp Business app, which now has more than 200 million monthly users. Looking ahead, we're focused on enabling businesses to optimize for conversions further down the funnel in our messaging applications. We're also investing in scaling other on-site objectives like lead generation and Shops ads. Before turning to our revenue outlook, I'd also like to talk about our investment philosophy. We expect to bring the discipline and habits that we built during this year of efficiency with us as we plan for the future. At the same time, we remain focused on investing in the significant opportunities ahead. Part of supporting these initiatives will come from prioritizing them against other areas of work and shifting resources. However, in some cases, they will require incremental investment. This is particularly true in the areas we see the most significant opportunity, which include AI and the metaverse. As I mentioned last quarter, we also remain focused on modestly evolving our capital structure over time. We were pleased to execute our second bond offering in May and expect a measured pace of future debt raises as we work toward improving our overall cost of capital while maintaining a positive or neutral net cash balance. In addition, we continue to monitor the active regulatory landscape. With respect to EU-US data transfers, we saw a positive development with the European Commission's adoption of a final adequacy decision, which allows us to continue to provide our services in Europe. This is good news, though broadly speaking, we continue to see increasing legal and regulatory headwinds in the EU and the US that could significantly impact our business and our financial results. Turning now to the revenue outlook. We expect third quarter 2023 total revenue to be in the range of $32 to $34.5 billion. Our guidance assumes a foreign currency tailwind of approximately 3% to year-over-year total revenue growth in the third quarter based on current exchange rates. Turning now to the expense outlook. We anticipate that our full year 2023 total expenses will be in the range of $88 to $91 billion, increased from our prior range of $86 to $90 billion due to legal-related expenses recorded in Q2. This outlook includes approximately $4 billion of restructuring costs related to facilities consolidation charges and severance and other personnel costs. We expect Reality Labs operating losses to increase year over year in 2023. While we are not providing a quantitative outlook beyond 2023 at this point, we expect a few factors to be drivers of total expense growth in 2024 as we continue to invest in our most compelling opportunities, including AI and the metaverse. First, we expect higher infrastructure-related costs next year. Given our increased capital investments in recent years, we expect depreciation expenses in 2024 to increase by a larger amount than in 2023. We also expect to incur higher operating costs from running a larger infrastructure footprint. Second, we anticipate growth in payroll expenses as we evolve our workforce composition toward higher cost technical roles. Finally, for Reality Labs, we expect operating losses to increase meaningfully year over year due to our ongoing product development efforts in AR, VR, and our investments to further scale our ecosystem. Turning now to the CapEx outlook. We expect capital expenditures to be in the range of $27 to $30 billion, lowered from our prior estimate of $30 to $33 billion. The reduced forecast is due to both cost savings, particularly on non-AI servers, as well as shifts in CapEx into 2024 from delays in projects and equipment deliveries rather than a reduction in overall investment plans. Looking ahead, while we continue to refine our plans as we progress throughout the year, we currently expect total capital expenditures to grow in 2024, driven by our investments across both data centers and servers, particularly in support of our AI work. On to tax. Absent any changes to U.S. tax law, we expect the tax rate for the rest of the year to be similar to Q2 2023. In closing, Q2 was a good quarter for our business. We're executing well across our core priorities and are continuing to make progress on delivering exciting new experiences for our community. With that, Dave, let's open up the call for questions.
Certainly, and thank you very much. We will now open the lines for a question and answer session. To ask a question, press 1 followed by the number 4 on your touch-tone phone. Please pick up your handset before asking your question to ensure clarity. If you are streaming today's call, please mute your computer speakers. Your first question comes from the line of Brian Nowak with Morgan Stanley. Your line is open.
Thanks for taking my questions. Maybe a two-parter for Mark. Mark, you've spoken a few times over the last few months on AI agents and sort of building different types of assistants through Llama. I guess the two-part question is, could you just sort of talk to us a little bit about some of the use cases or consumer advertiser offerings you're most excited about enabling for some of these AI agents? And then the second one, just to sort of level set on timing a bit, can you just help us understand some of the larger technological barriers in your mind the teams will need to overcome to really scale these types of agent products across the ecosystems? Thanks.
Sure. So I think the main thing that I'll say on this for now is tune in to Connect coming up in September. We're going to have a lot more to talk about on the roadmap and products that we're launching. We wanted to get the Llama 2 model out now. That's going to underpin a lot of the new things that we're building. And now we're nailing down a bunch of these additional products. And this is going to be stuff that we're working on for years. But I think a lot of the journey will kind of start later this year when we start rolling out some of these things. But overall, I think that there are three basic categories of products or technologies that we're planning on building with generative AI. One are around different kinds of agents, which I'll talk about in a second. Two are just kind of generative AI powered features. So, some of the canonical examples of that are things like in advertising, helping advertisers, basically run ads without needing to, supply as much creative, or if they have an image but it doesn't fit the format, be able to fill in the image for them. So I talked about that a little bit up front in my comments, but there's stuff like that across every app. And then the third category of things I'd say are broadly focused on productivity and efficiency internally. So everything from helping engineers write code faster to helping people internally understand the overall knowledge base and at the company and things like that. So there's a lot to do on each of those zones. For AI agents specifically, I guess what I'd say is, one of the things that's different about how we think about this compared to some others in the industry is, we don't think that there's going to be one single AI that people interact with, just because there are all these different entities on a day-to-day basis that people come across, whether they're different creators or different businesses or different apps or things that you use. So I think that there are going to be a handful of things that are just sort of focused on helping people connect around expression and creativity and facilitating connections. I think there are going to be a handful of experiences around helping people connect with the creators who they care about and helping creators foster their communities. And then the one that I think is going to have the fastest direct business loop is going to be around helping people interact with businesses. And you can imagine a world on this where over time every business has an AI agent that basically people can message and interact with, and it's going to take some time to get there, right? This is going to be a long road to build that out, but I think that's going to improve a lot of the interactions that people have with businesses, as well as if that does work, it should alleviate one of the biggest issues that we're currently having around messaging monetization. Is that in order for a person to interact with a business, it's quite human labor intensive for a person to be on the other side of that interaction, which is one of the reasons why we've seen this take off in some countries where the cost of labor is relatively low. But you can imagine in a world where every business has an AI agent, that we can see the kind of success that we're seeing in Thailand or Vietnam with business messaging could kind of spread everywhere, and I think that's quite exciting. But overall, I think we're going to follow a playbook that's similar to what we normally do on products. In terms of how quickly some of these new products scale, that's one of the big unknowns for the business, and one of the things that we're debating heavily when thinking through the amount of AI capex to bring online, because the reality is we just don't know how quickly these will scale, and we want to have the capacity in place in case they scale very quickly. But because they're kind of brand new things, and there aren't that many precedents for things like this, it's actually quite hard to forecast. So I don't know, Susan, if there's anything on that last point that you want to jump in on, but I think that's probably all I'll say on this for now. But I'm really excited about this. I think that this is just going to be, it fits into all the different products that we're building really well. I think that this is going to both complement and touch and transform every single thing that we're doing, and I'm really excited for it. So tune in to Connect.
Your next question comes from line of Eric Sheridan with Goldman Sachs. Your line is open.
Thanks so much for taking the questions. Maybe one for Mark, one for Susan. Mark, just following up on Brian's question, I did want to ask, just to draw that out a little bit more, how you think about the extensions of a developer community sort of growing up around a platform like Llama 2. And we were intrigued by the Microsoft announcement. You traditionally have been more of a consumer-facing company with product. Could this provide you an avenue to be more of an enterprise-facing company over the long term? And is there a strategy there that maybe we haven't seen from you in the past? I'd love to flesh that out a little bit. And Susan, just one for you. The VRL losses just continue to build, and I think we continue to struggle a little bit of what the drivers of those losses are, and how should we think about some of the components driving the losses versus elements of earning a return on those losses over the medium to long term, as Mark sort of framed the time frame around metaverse. So any color there about sort of rate of change or components of the losses in VRL, I think would be super helpful. Thanks so much to you both.
Yeah, sure. I'll take a cut at both of those, then Susan can jump into the second one if there's anything that she wants to add there as well. All right, so Llama is an open source project, which is a little bit different from building out a developer platform, although there will be an ecosystem around this. What we've seen around open source work that we've done, which we've done a lot of in our core infrastructure work, design of servers and data centers and basic infrastructure, as well as in AI. And I point out some of these in my remarks up front, like PyTorch and just a bunch of other models that we've released recently. One of the things that we've seen is that when you release these projects publicly and open source, there tend to be a few categories of innovations that the community makes. So on the one hand, I think it's just good to get the community standardized on the work that we're doing. That helps with recruiting, because a lot of the best people want to come and work at the place that is building the things that everyone else uses. It makes it so that people are used to these tools from wherever else they're working. They can come here and build here. But in terms of improvements that we expect to see from the community, there were really a few different types. One is specifically around safety and security. That's a very important issue in AI. In open source software overall, we've just seen through the history here that open source software gets scrutinized more, and therefore ends up being more secure and safer. And we think that there's a very good chance that's the likely outcome here. And whatever improvements that people make to harden it in the community, we'll be able to roll that in to our work, both for the first party products that we'll launch, as well as making it easy to propagate that across the industry and make the AI that everyone uses safer. I would also hope to see efficiency improvements. I mean, even from the initial Llama that was just released as a research project, some of the improvements are around things like quantization and being able to run the model way more efficiently. Now, we're spending so much on AI CapEx that all the help that we can get from the community to make this stuff more efficient to run will be helpful, not just for individuals to be able to run powerful models on their laptop or locally or without a huge amount of compute, so individuals can afford it, but that should hopefully translate over time into just a more efficient infrastructure for us, which hopefully could be quite a big savings. So that's more what we're seeing there. We partnered with Microsoft specifically because we don't have a public cloud offering. So this isn't about us getting into that. It's actually the opposite. We wanted to work with them because they have that and others have that, and that was the thing that we aren't planning on building out. But one of the things that you might have noticed is, in addition to making this open through the open source license, we did include a term that for the largest companies, specifically ones that are going to have public cloud offerings, that they don't just get a free license to use this. They'll need to come and make a business arrangement with us. And our intent there is, we want everyone to be using this. We want this to be open. But if you're someone like Microsoft or Amazon or Google, and you're going to basically be reselling these services, that's something that we think we should get some portion of the revenue for. So those are the deals that we intend to be making, and we've started doing that a little bit. I don't think that that's going to be a large amount of revenue in the near term, but over the long term, hopefully that can be something. Not sure if there's anything else to add on that, but Susan, you can jump in if you want. On RL, let me just jump over to that for a second. I don't think we're going to break out numbers right now, but I'll defer to Susan on that. I mean, one big thing for the next year is the launch of Quest 3, right? And basically, this is going to be the biggest headset that we've released since 2020, when we came out with Quest 2. And there are just a lot of expenses related to bringing that to market, and I think that's at least in the near term going to be one of the major drivers of this. So I think that's probably the main thing that I would point to there. We're continuing to I continue to think, looking at the VR work that we're doing and the AR work, some of the neural interfaces work, I think we're leading in these areas. It's been good to see what others in the industry have done, because to some degree it gives us more confidence that we're on the right track. And even though I know from an investor standpoint, most people aren't investing on quite as long of a time horizon as we are here, so I kind of get that a lot of investors might want to see us spending less here in the near term. My view is that we are leading in these areas. I believe that they're going to be big over time. I think we've shown that we can deliver good business results in the near term while investing ambitiously in the long term. So I'm planning on continuing to do that, and I do continue to believe that over time we will be happy that we did that. So I don't know, Susan, if there's anything you wanted to add there.
Sure. Let me just add a couple things. Very quickly on the first question, I just want to clarify that we don't expect that Llama is going to result in a separate top-line enterprise revenue line, so just making sure we're totally clear. On the second question about the growth in Reality Labs operating losses in 2024, Mark alluded to the fact that, this is an ambitious long-term horizon, multifaceted roadmap. There are lots of components to the Reality Labs portfolio across VR, AR, metaverse, social platforms, neural interfaces. And we really have a long-term time horizon for evaluating the return on our investments here. So in the near term, we're focused on growing adoption of the existing products, and we're constantly learning more about demand and use cases that inform our future plans. But a lot of the investment that's driving the growth here is around conducting the fundamental R&D to solve hard technology problems that are going to enable our vision here. A lot of it is around clearing technical hurdles that will make, make subsequent devices smaller, cost less, weigh less, et cetera. So that's really on the Reality Labs side. Again, as we said, we expect operating losses to increase meaningfully year over year in 2024. In 2024 specifically, I think that'll be driven by a combination of both headcount related and operating costs. But again, our ambitions in Reality Labs, haven't changed, and it continues to be a significant long-term opportunity for us.
Your next question comes from the line of Mark Shmulik with Bernstein. Your line is open.
Great. Thanks for taking the questions. Mark, things move quickly. Like a month ago, we weren't talking about Reels. A quarter ago, we weren't talking about Llama. And start of the year, we were barely talking about AI. If you think back to kind of just how you were prioritizing your time at the start of the year to kind of where you are today and how that's kind of changed, we'd love to just get some color on kind of the changing priorities and, really where you're spending your time. And then the second question, really impressive, obviously, acceleration and growth in kind of the core ad business. We'd love to just get some color, kind of beyond the vertical contribution. What are you seeing in terms of kind of adoption of Advantage Plus products really driving some of that, improved growth, especially what we've seen relative to the rest of the sector? Thank you.
Yeah, I can start with the first, and then Susan can take the second. I actually think our priorities have been pretty consistent for a few years now. I think the way that people hear them might be different. But, for example, last year, I think we were getting quite a bit of critique for the volume of AI CapEx spending that we were doing. And now, obviously people want to understand where that's going and where we think that trajectory is going and want to make it as efficient as possible. But I think at this point, it's more well understood that I think that was a good investment, and it's driving results in the near term and enabling us to build some of the new experiences that I think we all think are pretty fundamental. I don't think Reels is new, although maybe you meant Threads when you said that. Threads, I would say it's not that Threads is like, it's not a massive project. It was, I thought for a while that the opportunity around public conversations and kind of a text-based product was bigger than what had been executed yet in the market. So we had a relatively small team work on that. And this year, I think there have been two things that have just vastly exceeded my expectations. One was Llama. The initial model, we thought it was interesting, but the scale of adoption, even just for the research version, really spurred us to go do Llama 2, and that was vastly more than we expected. And the second is Threads has been dramatically more than we expected in terms of the adoption and the rate of that. We thought this was going to be kind of a project that we just, we had a small team working on for a while, but it really kind of blew up and created a big opportunity immediately. But no, I think over time, you should expect that we're going to focus on AI and the metaverse. AI includes both all of the ranking and recommendation systems that power the core apps. So, all the content that you're seeing in Facebook and Instagram, all the ads content that you're seeing. It also underpins all the safety systems that we build, and increasingly, it's all the generative AI stuff. So all the agents, all the generative features that we're going to be rolling out, and a lot of the other work that's going to underlie some of the efficiency stuff that we're doing internally. And then the metaverse stuff, I think we've talked about for a while. So I don't think that there's much change there, except that I'd say the signals that we're getting from the market are, it's certainly not getting adopted a lot faster than we expected. So that's sort of the somewhat sobering signal. But on the other side, I think a lot of companies that otherwise are doing, we respect and do great work. We don't necessarily view as building things that are ahead of where we are, which gives us confidence that we think that the long-term thesis still will hold there. We think that we're going to be the leaders in it, and nothing that we're seeing from the market makes us rethink that in a fundamental way. So I think we're going to continue focusing on AI in the metaverse as the two big thrusts of what we're doing, and all the other things are kind of fall out of that.
And Mark, I'll take the second question that you asked around the Q2 revenue acceleration. So I think there were a couple parts. One was around the acceleration in the core ads business. The second was on the Advantage Plus products. In terms of the Q2 revenue acceleration, I'd highlight there are a few factors driving that. The first is, frankly, we're lapping a weaker demand period, including the first full quarter of the war in Ukraine and the suspension of our services in Russia. Second, we saw increased supply and improvements to ad performance, including improved Reels monetization as we continue to work down the Reels revenue headwind. And third, there were lower FX headwinds for us this quarter. So those were all three, things that helped drive the revenue acceleration in Q2. In terms of the question about Advantage Plus, specifically, Advantage Plus is one of multiple AI-powered ad products that we have right now in the market. With Advantage Plus specifically, we're seeing strong adoption and particular success with the e-commerce and retail verticals. And we've seen good traction with other verticals like CPG, especially DTC brands. And we're continuing to launch features to unlock use cases for advertisers and make it easier for them to adopt Advantage Plus campaigns and measure their performance gains. So we've got a lot in the pipeline there that we're excited about for both the Advantage Plus shopping campaigns specifically, which were our first sort of foray into this area, but then the Advantage Plus portfolio more broadly, that basically enables us to take that same playbook of helping advertisers iterate and test very quickly and apply it to many different steps of the end-to-end ad buying experience. So the feedback and results that we've seen from advertisers is good. And, we think it's a really promising area that we're continuing to invest in. But it's one of many ways that we're using AI to continue to sort of help make our ads systems and recommendations and ranking engines more performant to deliver better measurement and results to advertisers.
Your next question comes from line of Justin Post with Bank of America Merrill Lynch. Your line is open.
Great. Thank you for taking my question. I guess I want to follow up on Reality Labs, passing 40 billion in losses and increasing annually next year. Just think about, maybe help us understand how the ROI on the business, how you're thinking about that investment, either on a standalone basis or as a complement to the family of apps. If you're thinking about it from an investor perspective. Thank you.
Well, I think it's both over time. The primary way that I think about this is that, we've been able to show that we've, I think, been quite successful at building, large scale social experiences within the constraints of platforms that, often our competitors are defining. I think we're going to be able to do even better work, and there's a lot of things that I would like to see us build that we just can't because we're of the ways that we're constrained by the competitors who build these platforms. And over time, the main way that I think about this is from a product and mission perspective is, we're here to build awesome experiences that help people connect. I think helping to shape the next platform is going to unlock that in a profound way for decades to come. And that's what I'm here to do, and I think what a lot of people are here to do. So that's kind of the first principles part of this. From a business perspective, I think that there's going to end up being a large business component of this that is Reality Labs specific, directly, the products that we're building there, and having that be a good business. But I also think that a lot of this is going to be that it unlocks a lot of value for the other experiences, the current apps that we have, what you think of as the family of apps. Where we, currently just a lot of the potential value, whether it's just engagement that could be created, features that we would love to build that we're not allowed to because Apple or others just don't allow us to build those things. I think that that's really unfortunate for the industry. I think that there's a lot of lost engagement that would have happened. A lot of the monetization and value that gets created. I mean, just look at what happened with app tracking transparency, the massive value destruction for small businesses because of the rules that were set by another platform. And that's not, in a future version of the world, it's not, that would be recognized not by device sales or some new experience that we're building in Reality Labs. You would basically see that accrue through more efficient monetization of the apps and experiences that we're building in other places. So I think it's going to be both. But I think this is just a very fundamental thing. This is a very long-term bet. at a deep level, I understand the discomfort that a lot of investors have with it because it's just outside of the model of I think even most long-term investors how you would think about this. And look, I mean, I can't guarantee you that I'm going to be right about this bet. I do think that this is the direction that the world is going in. There are a billion or 2 billion people who have glasses today. I think in the future they're all going to be smart glasses, and all the time that we spend on TVs and computers, I think that's going to get more immersive and look something more like VR in the future. And I think that what we're seeing is richer ways for people to communicate across even the mobile apps that we have, going from text to photos to videos, just this continual trend towards being more immersive. So, I like all of these trends line up to make me think that this is the right thing. I think we're going to be happy that we did this. So that's kind of how I think about it, both from kind of a mission and product perspective, a business perspective, an investment time frame perspective. But I also, understand the discomfort that some folks have with something that I can't put exact numbers on a near-term time horizon around.
Your next question comes from the line of Doug Anmuth with JP Morgan. Your line is open.
Thanks for taking the questions. One for Mark, one for Susan. Mark, you touched on it a bit, but can you just talk a little bit more about what you've learned from Threads early on, not just for that product specifically, but also as you look to leverage the Family of Apps platform to launch additional products over time? And then, Susan, you lowered the CapEx outlook this year by $3 billion. Can you just provide more color on the delays in projects and equipment in 23? And is there any way to frame how meaningful the CapEx increase could be in 24? Thank you.
Yeah, on Threads, it's maybe too early to do this kind of analysis. I mean, on the one hand, we've tried a bunch of standalone experiences over time, and in general, we haven't had a lot of success with building kind of standalone apps. The biggest exception to that, of course, is Messenger, but that started off as functionality inside Facebook and was spun out. So, part of me wonders if this is just a kind of classic, venture capital portfolio question where you try a bunch of things and a bunch of them don't work, and then every once in a while one hits and is a much bigger success. It could be that, or it could just be that this is such an idiosyncratic case because of all of the factors that are happening around Twitter, or X, I guess it's called now. So it's hard to say. I mean, but I think when something works or doesn't, you can often point to the reason why it did or didn't, and there I think is an interesting intellectual question of whether you could have known that a priori that was actually going to be the case. But so I'm not sure. But also, rather than trying to kind of analyze that, I'd say we have a lot of work to do to really make Threads reach its full potential. That's not a foregone conclusion yet, even though I think we're off to a great start, and I'm optimistic that over time this could be a fifth great app in the family of apps. But we have a lot of basic work to do, and we have a basic playbook here, which is build an experience. It's got to be something that people like, so it has to have product market fit. Once you get that, it's not always retentive, so a lot of people might like an experience, but you need to kind of tune it so that way the numbers work, so that people who use it are continuing. We feel like we're getting to a good place on that with Threads. There's still a lot of basic functionality to build. Once we feel like we're in a very good place on that, then I'm highly confident that we're going to be able to pour enough gasoline on this to help it grow. Once we get to the point where we feel good that everyone who's using it is going to continue using it at a high rate, and then if a few years once we get to the point where it's at hundreds of millions of people, if assuming we can get there, then we'll worry about monetization. But I mean, that's basically the playbook that we're focused on. And so rather than thinking about right now, like what does this mean for other things like it that we can build, I'd say we're really just focused on taking this opportunity, which is an awesome one that we didn't expect to this scale, and making sure we make the most of this and execute it. But I do think it has been sort of this weird anomalous thing in the tech industry that there hasn't been an app for public discussions like this that has reached 1 billion people. When I look at all the different social experiences, it just seems like there should be one like this. I think there are a lot of reasons that you can point to why that might have not been the case historically, but it's awesome that we get a chance to work on this, and I'm really optimistic about where we are. But it's going to be a long road ahead.
And Doug, on your second question about our 2023 CapEx forecast and the impact on 24. So I'll start with 2023. The reduced forecast that we gave for 23, I mentioned on the call, is driven both by some cost savings, particularly on non-AI servers, where we previously had some underutilized capacity, and we've been identifying ways to be more efficient in the way that we allocate that capacity towards all of our various needs. As well as shifts in CapEx into 2024 that's coming from delays in data center projects and server deliveries, and that'll just push that associated CapEx, which we were planning for in 23, into 24. We're still working on our 24 CapEx plans. We haven't yet finalized that, and we'll be working on that through the course of this year. But I mentioned that we expect that CapEx in 24 will be higher than in 23. We expect both data center spend to grow in 24 as we ramp up construction on sites with the new data center architecture that we announced late last year. And then we certainly also expect to invest more in servers in 2024 for both AI workloads to support all of the AI work that we've talked about across the core AI ranking recommendation work, along with the next gen AI efforts. And then, of course, also our non-AI workloads as we refresh some of our servers and add capacity just to support continued growth across the site.
Your next question comes from the line of Youssef Squali with Truist. Your line is open.
Great. Thank you very much for taking the questions. One for Mark and one for Susan, maybe. Mark, you touched on this a little earlier, but there's this open source versus closed source debate going on with Meta as one of the companies on one side of it with Llama and Llama 2. How do you see this market evolving over time? Do you see one approach as being potentially superior to the other and therefore may be likely to garner greater adoption? Or is this really a win-win situation, just considering how early we are in this process and how large the potential TAM is? And then Susan, your guidance for Q3 implies at the midpoint about a 20% growth, which is a pretty steep acceleration from Q2 at 11 or 12%. Could you maybe just help us understand the drivers of that acceleration? And as we look into Q4, the comps remain pretty easy. Is that sustainable into year end? Thank you.
Yeah, I can speak briefly to the first one. I do think that there will continue to be both open and closed AI models. I think there are a bunch of reasons for this. There are obviously a lot of companies that their business model is to build a model and then sell access to it. So for them, making it open would undermine their business model. That is not our business model. We want to have we view the model that we're building as sort of the foundation for building products. So if by sharing it, we can improve the quality of the model and improve the quality of the team that we have that is working on that, that's a win for our business of basically building better products. So I think that you'll see both of those models. There are also some important safety questions that I think we'll need to continue thinking about over time. There are a number of people who are out there saying that once the AI models get past a certain level of capability, it can become dangerous for them to become just in the hands of everyone openly. I think what I think is pretty clear is that we're not at that point today. I think that there's consensus generally among people who are working on this in the industry and policy folks that we're not at that point today, and it's not exactly clear at what point you reach that. So I think there are people who are kind of making that argument in good faith, who are actually concerned about the safety risks. I think that there are probably some businesses that are out there making that argument because they want it to be more closed because that's their business. So I think we need to be wary of that. But I think for both of those reasons, the business reasons and the safety reasons, I think there will continue to be a mix of open and closed models, and it's not just going to be that one thing is what everyone uses. I think different businesses will use different things for different reasons. And by open sourcing Llama now, we're not on the second question around safety. we intentionally did not go out there and say we're going to open source every single thing in the future because, we do want to have the space to be able to look at how the safety landscape evolves. And, if we think that, we do cross some kind of critical threshold in the future, it may not be the right thing to open source it in the future. But for our business model, at least, since we're not selling access to this stuff, it's a lot easier for us to share this with the community because it just makes our product better and other people's. And that I think is a really healthy dynamic for the industry.
And thanks, Youssef, for your second question, which I'll take. You asked about our Q3 revenue outlook and maybe also what that implies looking forward into Q4. So on the further acceleration, that we've guided to in Q3. First of all, I just point out that Q3 22 revenue declined 4.5% year over year. So we're really lapping a much weaker demand period a year ago, when we've certainly seen demand this year stabilize. And so it's really a much easier compare. We also are expecting that currency is going to flip to a 3-point tailwind from a 1-point headwind last quarter. And finally, as I've mentioned earlier on this call, we've been investing for a long time and I think executing really well across our core monetization work and continuing to grow engagement. And I think we're going to benefit from all of the investments that we've made in those historical and key priorities for us. In terms of what this means for Q4, we're not sharing a Q4 revenue outlook yet. There are obviously some tailwinds to year-over-year growth in Q4. Again, the same point about a weaker compare applies. And at current rates, FX would be a larger tailwind in Q4 than we're expecting it to be in Q3. But we've had sizable fluctuations in advertiser demand over the last year. It's been a pretty volatile period. So while we're seeing strong advertiser demand now, and that's certainly informing our outlook, it's harder to predict as we look further forward, and there are a wide range of possible outcomes in Q4.
Dave, we have time for one last question.
Thank you, Ken. That will come from the line of Brad Erickson with RBC Capital Markets. Your line is open.
Yeah, thanks. Just had a follow-up, I guess, on the CapEx. Just in that planning process you keep alluding to for the 24 CapEx outlook. I think, a lot of your commentary here implies that new products, it sounds like, are going to be really central to instructing that number. Just curious how dependent it also is based on just views of revenue growth in 24 and the relationship there. Thanks.
Yeah, thank you, Brad. I can go ahead and take that one. So, our growth in AI investments is really the thing that is driving the growth in our 2024 CapEx outlook. And I think there are a couple components to that. There is both the core AI work, which powers our ranking and recommendation systems, which underpins both a lot of our content ranking and engagement growth, as well as the monetization work. And that's an area, where we're able to measure the ROI of our investments there, and we feel good about the ROI of those investments, and we want to continue investing appropriately to drive revenue growth, at the same time being mindful of our desire to, over the long term, decrease capital intensity. There's also another component, which is the next generation AI efforts that we've talked about around advanced research and Gen AI. And that's a place where we're already standing up training clusters and inference capacity. But we don't know exactly what we'll need in 2024 since we don't have any at-scale deployments yet of consumer or business-facing features. And the scale of the adoption of those products is ultimately going to inform how much capacity we need. We think these are both going to be compelling investment opportunities, and some of the AI capacity is fungible. So if we don't end up needing some of the capacity for our Gen AI work, we'll be able to allocate it to our core AI work, supporting ads and engagement. But we're really still working on our 24 plans. We will have a clearer and more quantitative outlook as those plans shape up. But we are mindful of our intention to reduce the capital intensity of these investments over time.
Great. Thank you for joining us today. We appreciate your time, and we look forward to speaking again soon.
And this could.
Okay, guys, so that is the end of the Meta earnings call. Meta with a great earnings reaction, up to 321s right now. What a ridiculously crazy big gain. Honestly, check them out, man. Meta, huge gains right now. Let me know what you guys think. Don't go anywhere. As soon as we close this stream, we're going to start another crypto stream. So our other crypto stream is about to start right now. If you haven't already, hit the subscribe button. I appreciate the love and support. Check out Chart Prime. Chart Prime is a trading view indicator service you can use in stocks, crypto, Forex, futures. It's a trading view indicator. You can also use it in crypto. but I've been using them a ton lately. My favorite way to use them is on the Market Oracle Pro. If you look at this, can be incredibly powerful. Like, look at this. So the Market Oracle Pro will give you custom trading view alerts, and this is just a small piece. You can use this in stocks, crypto, forex, futures, all that good stuff. And again, I'm letting it load right now, but like, look at how accurate this is. Strong buy signal here, bounce. Sell signal here, drops. Strong sell signal here, big drop. Strong buy signal here, big bounce. And then again, this is just a small piece. There is oscillators, smart money concepts. If you like smart money concepts, you can put up chart patterns and it'll literally show you different chart patterns on the chart. Just really useful. And it's like $35 a month. It's incredibly cheap and you can use it in stocks, forex, futures. Check them out. I'll post the link here. And again, as soon as we close this stream, it's going to bring you to our new stream about crypto right now. Again, we're starting that stream up right now. And again, I'll post the link here just in case for whatever reason it does not bring you to the crypto stream. The link for that is right here. Bear with me. Here's the link to the crypto stream. If for whatever reason it does not bring you over there, here's the link right here. But yeah, guys, I'll see you guys over there. Good luck. Y'all be safe. I'll see you guys later.